afternoon and welcome to the Biztech Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. David Kuo, founder of the Smart Investor out of Singapore, is our guest today. David, good afternoon.
Hey, selamat tengah hari, Brian.
Now, I'm going to come back to you and get your insights, but first, let's take a look at how crypto markets have performed and also how regional stock markets have performed in the first half of the day. Bitcoin is at 29,755.1. It's down 1.09%. Ethereum is at 1,937.69, down 3.37%. Now, looking across the regional stock markets, the Straits Times Index is up 0.91%. The KLSE is up 0.14%. Shanghai is up 0.77%. The ASX All Ordinaries is down 0.56%. The Nikkei is down 0.13%. The Hang Seng is down 0.37%. And rounding up the numbers, we've got the Kospi, which is down 0.14%. Now, David, what's your view on market performance in the first half of the day?
Well, I think, Brian, there is still a lot of confusion at the moment with regards to where the stock market is heading, where the economies around the world are heading, and this all stems from the Federal Reserve minutes yesterday. So I think people are just generally having a looking around. I'm not entirely surprised that Singapore and Malaysia are up today, because I think when you have a look at these two stock markets, the shares still look relatively cheap, and there probably are a lot of people out there buying. Hong Kong is a bit of an anomaly, and I think Shanghai is a bit of an anomaly as well, because I can't understand why Shanghai is up because of all the problems that are going on inside China. But perhaps it is because they think that the Chinese government is going to try and pump as much money into the Chinese economy as possible in order to achieve their growth targets for the end of this year.
So speaking of the Fed FOMC minutes, basically we've got 2 half-point rates hikes baked in for June and July. What's your view on what's going to happen next?
Well, it was really quite amusing yesterday on the stock market because nothing much was happening up until the release of the Federal Reserve minutes. And when the Federal Reserve minutes did come out, they said that they would be quite likely to increase interest rates by 50 basis points. That's half a percentage point in June and another half in July. I think people were a bit worried that maybe the Federal Reserve would have gone higher than 0.5%, which would have dragged the market down. But because the 2 half points had already been baked in, they thought, hey, it's not such bad news after all. But if they have a look at what the minutes actually said, it was that the Federal Reserve may have to go higher and faster depending upon what happens to inflation. So there is this bet at the moment that the Federal Reserve will not go higher and faster than the 2 half-point increases. But what happens in July is anybody's guess. If inflation persists at relatively high levels, then I think the Federal Reserve has no choice but to actually sort of go much higher than half a percentage point towards the tail end of the year.
So then, David, what are the implications for central banks in Asia and Asian banks as well?
Well, I think you only have to look at your own country, Brian, to actually sort of see what's happening to the Malaysian ringgit versus the US dollar. It's almost at an all-time low at the moment against the US dollar.
And against the Sing dollar as well.
Against the Sing dollar as well. I mean, the Sing dollar tends to sort of track the US dollar as closely as possible, primarily because Singapore has a lot of reserves, and they tend to use the currency as a means of controlling inflation rather than to use interest rates, which is the preferred method by other central banks around the world. So back to your question, what is likely to happen? I think we've already seen the writing on the wall. The Bank Negara Malaysia surprisingly increased interest rates this month, when a lot of people expected the central bank just to stay on hold. But I think the other central banks will also be doing something very similar because they don't really want a weakened currency. A weakened currency is great if you're exporting goods, but if you're going to be buying stuff from outside, then of course you have a problem.
You have imported inflation.
you're going to get imported inflation, and you can control that by making sure that your currency is as strong as possible. So what they also don't want to see is some kind of capital flight from a country. And we all remember what happened the last time when there was a capital flight out of Malaysia. So we don't really want to see that happening again. So I guess what is going to happen is that central banks will have to respond to the strengthening US dollar, the rising interest rates in the US, whether they like it or not. And I think that is probably where the market is betting that the Fed will not go hard and fast as far as interest rates are concerned, because the Fed doesn't want to crash the US economy. And if they think that the US economy will continue to tick along relatively smoothly, then they will think it's safe to increase interest rates. But if the economy takes a downturn for whatever reason, then I think there'll be a problem. But only you and I and your viewers will know what is happening to the economy outside. I mean, are people still going out there spending money? Are people comfortable? I'll give you an example, Brian. I mean, I was having lunch yesterday somewhere, and one of the waiters came up to me, and we were talking about the price of food, and he said in Malaysia, the price of a 1 kilo chicken in Johor had gone up to above 27 Malaysian ringgits for the chicken, whereas previously he was only paying 16 Malaysian ringgits. Now, if the price of chicken is going up that much, and chicken is a very popular food amongst people, how are they going to be able to afford it, Brian?
So this is a huge impact, and food inflation is going to have a huge impact, particularly on the economies across the region and among the lower income. So that's going to impact households. Obviously, this is something that governments are watching tremendously closely because of the potential for unrest. But David, then what are the implications for all of this on investors?
Well, I'm really surprised that banks are doing better than what they are at the moment, because we all know that when the central bank increased interest rates, the commercial banks and the investment banks, or all of them, will have to increase their interest rates as well. And so consequently, what it really means is that the amount of money that the banks make, this net interest margin that everybody talks about, will start to widen. And so as a result of that, the banks will be able to make more profit, not because they want to make more profit, but it's just a natural consequence of the widening net interest margin. So I wouldn't be in the least surprised if we actually sort of see a rally in the bank shares, if not sooner, then definitely later, before the end of the year, that bank shares will start to rise, particularly when they start reporting their next quarter's earnings and they say, guess what? Our profits are up simply because the net interest margin has started to widen, and we've been able to make more profits as a result. The downside of that is that there'll be lots of people out there who may not be able to service their loans, and so we could see the non-performing loans or bad debt start to rise at the banks. But there's this balance. If the amount of money that they make from the net interest margin starts to rise faster than whatever bad debts they have to make provisions for, then I think, the bottom line of the banks are going to look relatively strong, which is really not surprising when Jamie Dimon from JP Morgan sort of came out and said everything seems to be looking good at the banks and at his bank, and that they should be able to make higher profits this year.
Now, David, thank you very much for your insights, and have a good rest of the week.
Thank you.
We've been speaking to David Kuo, the founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It's also available on Rajhi Bank's social media platforms. Please like and subscribe to our various platforms. Thanks a lot for tuning in.